afternoon. Asian shares mostly rose as investors assess the Russia-Ukraine conflict following a massive comeback on Wall Street overnight. Japan's Nikkei was up 1.9%, Hong Kong's Hang Seng Index declining about 0.5% in late trade. European stocks were higher, tracking a fragile global rebound. Markets have slightly pared back expectations for central bank hikes this year, but they still see around 6 quarter-point increases by the Fed. Yesterday's Russian assets nosedived, spurring emergency action from the country's central bank. Almost $200 billion in stock market value was wiped out, and roughly a third of the sovereign's debt value. When we look at what's happening locally in our JSE, it's a completely different picture from what we were seeing yesterday around about this time. Resources at this particular time dropping about 0.4%. It's a green across the board, led there by the industrials. But to give us more perspective, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. As I mentioned there, completely different issue, for a rather different picture from what we were seeing yesterday. What's driving markets right now?
Good afternoon, Nastasia, and to your viewers. Yes, a very different open this morning, really led by a strong rebound in the U.S. overnight, with the Nasdaq up 3%. Really a bit of a relief rally after a week of heavy selling. Markets really, which had sold the rumor of the aggression from the Russians into Ukraine, really now feeling that maybe the worst of the news is discounted in the market. Although we have to say that by lunchtime, we've seen the JSE giving up some of its gains, rotation out of yesterday's winners with the gold, platinum, and Sasol as the oil play really starting to point down. So the all share today flattish after being down over 2% yesterday.
When you look at the picture, especially the kind of environment we're in right now, how important is flexibility? I mean, what's key here, especially for someone in your position?
Yeah, it's a very good question. I mean, we live in very volatile times, and often what we see on the JSE, and you do that on a daily basis, is influenced by forces very far from our own economy. So we've seen at the beginning of the year concerns about the Federal Reserve raising rates and concern of runaway inflation in the developed world, especially the U.S., where inflation hit 40-year highs. So the question is, does one try to get ahead of the trend, or does one stick to a long-term philosophy? We are very much focused on where we see value at Ashburton. So we see value in South African equities and bonds rather than offshore, and we've stuck by that. And if you look at the recent sell-off, what's quite interesting, Nastasia, is that the JSE is up almost 13% year to date, whereas the S&P is down 12% in dollars. So that view continues to be justified, and a war between Russia and Ukraine, as it's ongoing, will impact Europe and foreign markets, we believe, more than the JSE and our own economy.
Are there sectors of the market that you believe will continue to rally no matter what happens?
Yeah, what's quite interesting is, for now, we've seen that high inflation seems to be positive for commodity prices, and the other factor is a war between Russia and Ukraine seems to have a very positive impact on some of the metals which we also produce, especially the palladium and some of the other related metals. So that's positive. On the downside, obviously, it's impacting the oil price, which went over $100 a barrel, and the natural gas prices. So energy prices spiking up, which obviously will impact globally disposable income of the consumer. So it's a tax on consumers. So that's not good for the local inflation picture, even though it's something which is happening far from our shores.
We spoke a little bit about, the kind of flexibility that's required in an environment like this. How cautious are you, given the fact that we don't know how long this ongoing tension is going to continue for?
Yes, again, a good question. I think some markets which are very expensive are more at risk. We've seen the NASDAQ and the U.S. markets, which have been the winners for now several years, being the most at risk in terms of an environment which is going to be more stagflationary, whereby you have low growth and high inflation. We think that South Africa, the tip of Africa, I think we're far removed from these geopolitical problems, and we're likely to do better. And then an added advantage is if these tensions mean that metal prices remain high, that's going to be very good for us from a budget perspective in terms of what we've seen in terms of overruns, and the term of trades also have meant that the rand has remained strong. Even in the midst of this whole crisis, we've seen a slight weakening of the rand against the greenback, but it hasn't been the type of sell-off. Like if you look at the Russian ruble, it's now at record lows against the dollar. So South Africa looks like a bit of a safe haven market away from what's impacting Russia and what's impacting European economies.
So we had Alibaba release their earnings yesterday, and what I found quite interesting is that they're now going to be focusing on user retention on their platforms as opposed to expanding the user base, which I thought was a quite interesting shift. What did you make of the company's earnings?
Yes, very good point. The international part of the business is still doing very well. Growth rates there at 18% per annum. I think still on a very strong growth path. They've also got a cloud business which is growing at 20% per annum on a strong growth path. The concerning part of the business is their really home ground of China. Their growth has slowed to under 7%, and as you say, I think what regulation is in the Chinese market is trying to attack is the fact that they're squeezing the marketplaces there and putting pressure on downstream on businesses which are part of their ecosystem. That's where we have concerns that it's going to be put profits under pressure over the longer term. And already you've seen over the last year reported net profits were down 27%. So we think it might take a little bit longer for the Chinese economy and Alibaba itself to get back to the previous level of growth that we've seen over the last few years.
Patrice, let's leave it there. Thank you so much for your time. That is Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments, giving us his perspective in terms of the latest market dynamics and, of course, touching in on those Ukraine-Russia tensions. That is it for me. We have Your Money and SME on Point with Debo Seto coming up.